All right, let's dive right in. We're going to break down a really fascinating thesis today, one that says all this chaos you're seeing in the markets, well, it's not an accident. It's actually a deliberate, high-stakes game of chicken with the Federal Reserve.
I mean, let's be honest, things have been feeling a little off, right? The source material we're looking at calls it a mini disaster, where the whole structure of the market just gets wiped out. So what's going on here? Is this just the economy doing its thing, or is there something else happening just beneath the surface?
And that's where this idea comes in. This whole situation is framed as a game of chicken. You've got investors on one side, the Fed on the other, both heading straight for each other. And the argument is, if you actually understand the rules of this game, you won't be the one who gets scared and swerves first.
So, to really get a grip on this game, we have to look at the game board itself. And that's the currency system. Because according to this analysis, the whole thing is designed to fall apart in a very specific and honestly pretty counterintuitive way.
It all starts with this concept, currency debasement. It's a simple idea that the dollar in your wallet today buys you less than it did yesterday. Your purchasing power is just constantly, slowly getting eroded. Now, that's not exactly a secret, but the way this analysis says it actually happens, that's the really interesting part.
So get this. The big idea here is that currencies don't just collapse down to zero. No, they collapse upwards. What does that even mean? It means the price of everything else, we're talking stocks, houses, crypto, you name it, goes through the roof to reflect how much value the currency has lost.
And this just lays it out perfectly. You see the value of the currency going down, down, down over time. So what has to happen to the price of assets? It has to go up. It's like a seesaw. So next time you see the stock market hitting another all-time high, you have to ask yourself, are all these companies really getting that much more valuable, or is the dollar just getting that much weaker?
And the go-to example for this is the stock market in Venezuela. I mean, look at that chart. It looks like the most insane bull market in history. But here's the thing, nobody in Venezuela was getting rich. Why? Because what you're seeing isn't a booming economy. It's a picture of a currency, the bolivar, completely collapsing upwards. That chart isn't tracking growth. It's a fever chart of a currency dying.
Okay, so if the whole system is basically designed for the currency to lose value, how do they keep it all from just blowing up in a massive panic? Well, that brings us to what this analysis calls the rules of the game, the playbook central banks supposedly use to manage this controlled demolition. So the argument goes that the goal isn't to stop your money from losing value. The goal is to manage it. They want a slow, steady bleed, maybe 2, 3, 4, 5% a year. Just slow enough, you see, that most of us don't really notice that our savings are being systematically drained away.
And this really just boils down to human psychology, doesn't it? We're not wired to react to slow, creeping changes. A 5% loss spread across an entire year? We barely feel it. But a 20% drop in 1 month? Oh yeah, that gets our attention. That causes panic. And so the whole point of the game is to keep things nice and slow and to avoid that kind of volatility at all costs.
And according to this theory, here's the 4-step playbook they run over and over. First, you create some volatility and fear, just enough to shake out the weak hands. Then, step 2, you pull some currency out of the system, maybe with some new taxes or tariffs. Step 3, that brings inflation down, which gives you the perfect excuse for step 4, fire up the money printers again, pump everything back up, and start the whole cycle all over.
Now, this is where things get really spicy, because the argument is that for this playbook to actually work, the people in charge have to actively mislead everyone about what they're doing and why they're doing it.
I mean, you can't get much more direct than that. The source material flat out accuses the Fed chair of either lying through his teeth or being completely clueless. And this incredibly strong claim really zeroes in on one specific issue: tariffs. Okay, so check this out, because this is the core piece of evidence being presented. You have Jerome Powell on the record saying that tariffs are going to push inflation up. But then you have a study from the San Francisco Fed, mind you, that looked at 150 years of data and came to the exact opposite conclusion.
Yeah, the Fed's own research found that higher tariffs basically act like a tax. They pull money out of the economy, and what does that lead to? Lower inflation, higher unemployment, and a hit to overall demand. So why on earth would the Fed chair say the complete opposite of what his own researchers found? The claim is it's all part of the game. You have to create a story that justifies your next move.
All right, so if we're living in this game, what's your next move? How do you, as an individual,
actually play? Well, this thesis puts forward a really clear, even if it is a bit of a contrarian, strategy.
So usually when you hear someone is a bear, you think they're betting on the stock market to crash, right? Well, this analysis completely flips that on its head. It says the real bear trade isn't betting against stocks, it's betting against the currency itself. It's going short the dollar. And how do you do that? By owning hard assets that can't be endlessly printed, with something like Bitcoin being the prime example.
And the logic behind this is just basic math, really. Think about it. If the denominator in an equation, that's the number of dollars out there, is always going up, then the numerator, the price of whatever you're measuring, has to go up too, just to keep the value the same. It's presented as a simple mathematical certainty.
And that brings us right back to the start, to that game of chicken. All the scary headlines, the sudden market dips, the manufactured drama. From this point of view, it's all designed for one reason, to scare you into selling, to make you swerve. The advice here is pretty simple. Know the game you're in, ignore all that noise, and whatever you do, don't chicken out.
So what's the end game here? Where is this all headed? Well, the analysis wraps up with a pretty stark long-term view, arguing that this outcome isn't just a possibility, it's pretty much already baked into the cake.
Wow, I mean, that's a powerful statement. The argument isn't that the currency might collapse in the future. It's that the collapse has already happened. The horse is out of the barn. The system is described as being debauched, which is a fancy way of saying it's been totally ruined and devalued, and we're all just living in the aftermath.
And as one last piece of food for thought, look at this pattern. In the parts of the economy where the government is heavily involved, think housing, medical care, college tuition, prices have just exploded. But in the areas driven by technology and free market competition,